Throughout history, gold has captivated civilizations. Gold has always held a special place in human culture. Its allure is not just in its beauty, but in its ability to endure through the ages. Its luster and rarity have made it a symbol of wealth and power. Kings and queens have hoarded it, explorers have sought it, and alchemists have tried to create it. Gold's unique properties, such as its resistance to tarnish and its malleability, have made it a preferred material for crafting coins, jewelry, and even religious artifacts. From ancient empires to modern nations, gold has played a pivotal role in shaping economies and influencing global events. The Roman Empire, for instance, used gold to fund its vast armies and infrastructure projects. In more recent times, the gold standard, which pegged currencies to a specific amount of gold, dominated global finance until the mid-20th century. Today, amidst shifting geopolitical sands and economic uncertainties, gold is once again taking center stage, as countries around the world are bringing their gold reserves back home. This move is not just about securing wealth, it's a strategic decision to gain financial independence and stability in an unpredictable world. This phenomenon, known as gold repatriation, is raising eyebrows and sparking debate about the future of global finance. Some see it as a prudent measure to safeguard national wealth, while others view it as a sign of declining trust in international financial systems. For centuries, gold has served as the ultimate safe haven asset. Its value tends to rise when other investments falter, making it a reliable store of wealth during turbulent times. Investors often turn to gold to hedge against inflation, currency devaluation, and other economic risks. In times of crisis, investors flock to its perceived stability, driving up its value. During the 2008 financial crisis, for example, gold prices soared as people sought refuge from the collapsing stock markets. This pattern has repeated itself throughout history, reinforcing gold's reputation as a safe haven. Now, as we navigate a period marked by inflation, geopolitical tensions, and a decline in trust in traditional reserve currencies, gold is experiencing a resurgence in popularity. Central banks are increasing their gold holdings, and individual investors are buying gold coins and bars in record numbers. The allure of gold, it seems, is as strong as ever, offering a sense of security in an uncertain world. Gold repatriation is not a new phenomenon. The practice of bringing gold reserves back to a country's own vaults has been around for decades, if not centuries. Historically, nations have always sought to keep their wealth within their borders, especially during times of geopolitical tension or economic uncertainty. In recent years, however, it has gained significant momentum, driven by a combination of economic, political, and strategic factors. The global financial landscape has become increasingly volatile, prompting countries to rethink their strategies regarding gold reserves. With a growing number of countries choosing to repatriate their gold reserves held in foreign vaults, this trend reflects a broader shift in global economic power dynamics. Nations are no longer content to rely solely on traditional financial centers like London or New York for the safekeeping of their gold. This trend is particularly noticeable among emerging economies, which are increasingly asserting their economic independence and seeking to reduce their reliance on traditional reserve currencies. These countries are looking to bolster their financial sovereignty and protect themselves against potential economic shocks. By repatriating their gold, these nations aim to strengthen their own financial systems and build greater resilience against global market fluctuations. This move is often accompanied by broader economic strategies aimed at diversifying reserves and reducing exposure to foreign currencies. One of the most notable examples of gold repatriation is Germany. The country has long been a proponent of holding substantial gold reserves, viewing it as a cornerstone of financial stability and national security. In 2017, the Bundesbank, Germany's central bank, completed a massive repatriation operation, bringing home over 674 tons of gold from storage facilities in New York and Paris. This monumental task required meticulous planning and coordination, ensuring the safe and secure transport of the precious metal. The decision to repatriate such a significant amount of gold was not made lightly. It was driven by a desire to have greater control over national assets and to mitigate risks associated with holding gold in foreign locations. The operation underscored Germany's commitment to safeguarding its wealth and maintaining financial autonomy. This move, which had been initiated several years earlier, was widely seen as a sign of Germany's growing unease with the global financial system. The country was increasingly wary of potential economic disruptions and geopolitical uncertainties that could impact the accessibility and security of its gold reserves. By bringing its gold closer to home, Germany aimed to ensure that its assets were more readily accessible in times of crisis. This strategic decision reflects a broader trend among nations to prioritize the security and accessibility of their gold reserves, highlighting the enduring importance of gold in the global financial system. Germany's decision to repatriate its gold reserves sent shockwaves through the international financial community. It was a clear signal that one of the world's leading economies was losing confidence in the traditional custodians of global finance. Germany's move was driven by a number of factors, including concerns about the stability of the US dollar, geopolitical risks, and a desire to increase transparency and control over its own assets. The Bundesbank's decision was not made in isolation. Other European countries, including France, the Netherlands, and Austria, had also repatriated portions of their gold reserves in previous years. However, the scale and timing of Germany's move made it particularly significant, signaling a potential shift in the global financial order. Poland and Hungary follow suit, bolstering national reserves. Following in Germany's footsteps, other Central and Eastern European countries, such as Poland and Hungary, have also embarked on gold repatriation programs. These countries, which have experienced their fair share of economic and political turmoil in recent decades, are seeking to bolster their national reserves and reduce their vulnerability to external shocks. By increasing their gold reserves, they aim to create a more stable economic environment. Poland, for instance, has more than doubled its gold reserves in recent years, bringing its total holdings to over 228 tons. This significant increase is part of a broader strategy to ensure financial security and economic stability. Similarly, Hungary has increased its gold reserves tenfold since 2018, citing the need to strengthen its economic sovereignty. The Hungarian government believes that by holding more gold, they can better protect their economy from global financial uncertainties. These moves reflect a growing trend among emerging economies to diversify their reserves away from traditional assets, such as U.S. Treasury bonds, and towards gold. This shift is driven by a desire to reduce dependency on foreign currencies and to have a more tangible asset that can retain value over time. Gold has historically been seen as a safe haven during times of economic uncertainty. By increasing their gold reserves, countries like Poland and Hungary are looking to safeguard their economies against potential crises. Financial analysts suggest that this trend may continue as more countries recognize the benefits of holding gold. The price of gold has been relatively stable compared to other assets, making it an attractive option for national reserves. Central banks around the world are taking note of this shift. International financial meetings often discuss the importance of diversifying reserves and the role of gold in achieving economic stability. The process of increasing gold reserves involves not just purchasing gold, but also ensuring its safe storage and management. Countries invest in secure vaults and advanced technology to protect their valuable assets. As Poland and Hungary continue to bolster their national reserves, they set an example for other nations. Their efforts highlight the importance of proactive measures in securing economic futures. In a world of ever-changing economic landscapes, the move towards increasing gold reserves is a strategic decision. It reflects a broader understanding of the need for financial resilience and independence. By prioritizing gold, these countries are not only protecting their present, but also investing in a more secure and stable future. The journey of bolstering national reserves is a testament to their commitment to economic sovereignty and stability. The allure of gold, a safe haven in uncertain times. The repatriation of gold reserves is not limited to Europe. Countries in Asia, including China and Russia, have also been steadily increasing their gold holdings in recent years. These countries are motivated by a combination of factors, including a desire to reduce their exposure to the US dollar, hedge against inflation, and enhance their geopolitical standing. Gold has long been viewed as a safe haven asset, particularly during times of economic or political uncertainty. Unlike fiat currencies, which are subject to the whims of central banks and governments, gold is a tangible asset with intrinsic value. This makes it an attractive option for investors seeking to preserve their wealth during periods of turmoil. Diminishing trust, the decline of the US dollar. The increasing popularity of gold as a reserve asset is partly driven by a decline in trust in the US dollar. For decades, the US dollar has reigned supreme as the world's reserve currency, underpinned by the size and strength of the US economy. However, in recent years, the dollar's dominance has been challenged by a number of factors. These factors include the rise of emerging economies, such as China, which are challenging the US's economic supremacy, concerns about the sustainability of US debt levels, and the increasing weaponization of the US dollar for geopolitical purposes. As trust in the dollar wanes, central banks and investors are looking for alternative reserve assets, and gold has emerged as a leading contender. If you found this video insightful, please like and subscribe to our channel, Express Econ Geo Finance Insights. We'd love to hear your thoughts, so leave a comment below.